Hey everyone, John Henry here from School of Trade, and today we're going to be talking about trading with linear regression channels. So a linear regression channel is something that basically shows you where the typical price movement should be in the markets. It's basically a standard deviation from a midline. So that midline is basically just a trend line that cuts through where the average price has been over the past, X amount of candles, whatever you set the regression channel to. So what we're looking for is you want to use the bottom of a regression channel as support and the high of a regression channel as resistance. Now there's a lot of different ways you can trade these, but some of the better ways would be to use two different charts. The first being a longer term chart. Here we've got the 16 JJ bar, and here we've got the 4, so our entry chart, a little bit of a faster time frame. Now on here, you're going to want a slower period regression channel, which is basically these green lines right here with a midline and then another green line. That's a regression channel here. Now you also want a faster period regression channel on the faster period time frame right here. The same thing, we've got the green up, up, and up. And basically what we're using those for is to show us where the trend is. Now the nice thing about these regression channels is they actually calculate when you go back and forward in time. It actually shows you where they were at that time. So as an example, let's scroll back to when we had a test of the low of that regression channel during regular market hours. We did test it down here, but that was at midnight. So we want to go a little bit further forward, and here's the first test of the bottom right here that triggered off at, let's see, about 755. So if we go back to 755, we should see a pattern that gave us a possibility to get long. And here's 755 right here in this area. And you can see we really didn't have anything, right? I mean, we had a minor cross up, never even had a signal reset. We were on a 6-7 wave, nothing really to signal us to get long. If we look at the regression channel, you can see at the time when we crossed higher, the regression channel was red. So we know that because the regression channel in the long term is green, looking at it here, we've got a green test in a green cloud. Everything is pointing up. We're not going to be buying on a red regression channel. It doesn't make any sense. So in this case, there was really no setup. So let's go forward in time, a couple candles here, and you can see we came back down and retested that bottom of the regression channel again. This time we pushed down to 103.13 as the low. Now that happened at about 9:54, 10 o'clock. So let's zoom forward a little bit here. And right here, 9:41. We had a cross up. Now this is where it's a little bit different. This is a better looking pattern. Now we cross up, and we had a pullback, okay? Now there's a couple things that make this pattern really stand out as a solid pattern. First of all, we crossed higher, big giveaway. We're shifting to a new direction. But even more so, we had a 1, 2, 3 reversal. It's one of our favorite patterns to trade. Now let's see where the linear regression channel lined up for our entry. We already know that we're looking for a pullback to, the cloud into our trigger zone. Let's see how it lined up with the regression channel. So you can see right here, it came close. It didn't quite test it though. It came close. That could have been an entry that you may have gotten in on that would have been aggressive though. You want to see these wick into them and bounce off like we had back here where price actually pierces through that level. That's going to be a stronger test. So let's wait until we see one of those. So we get another pullback, and now we have a pierce. Now this pierce down here, that's your entry sign. On top of that, we're testing the cloud. The trigger zone would have been somewhere around abouts in the middle here. And we have a reversal bar triggering us into the long side. So we've got a lot of things that are telling us that the upside in this trade is definitely the direction we want to go. And now we've got an entry point. So now that we have our entries mapped out, where are we going to put our stops? Where do our targets go? Where does everything get placed? So for the targets are pretty straightforward. We're going to be targeting the midline and then the top of the line. Now, because we're entering this pattern on the long time frame, we want to use a long time frame to give us those entries and exits. So when we're looking at the targets on the anchor chart, right now we're looking where the midline is, which is at 103.64 right here. Now remember, this does calculate as time goes forward, so we want to make sure to adjust with that move. So now that we're triggered in here, we're triggered in long at 103.44 or 103.43 in that area, and we're targeting 103.64 to start. Now, looking at 64 at the highs, what we want to do is look for price to go forward again. Now, remember, this does recalculate. And as we go a little bit further forward, you can see it gets bumped up to 103.69 and then starts getting pushed down again as the market fell back a little bit further. Now, keeping that in mind, as we're looking at this, we also have to be cognizant of where this line is in terms of the entry chart, because that is going to act as equilibrium. And when you're in equilibrium, it gets a little bit unpredictable. So you can use the midline and the top line of both the entry or the anchor chart. So looking at the midline on the entry chart, we tagged it here at 103.55. That's your first target taken off. Now your second target really isn't set until 103.72 up at these highs here, but remember this calculates further. So now as we start calculating down a little bit further, you can see now it starts averaging down. We're at 103.66 or so. Now back up again. You can see it kind of fluctuates up and down again, but that's why we're moving that first target to that midline. The midline is usually fairly easy to get a hold of. That last target is the one that's usually more designed as a runner target. It's something that's going to be just, let it run, let it go. If it hits the target, it hits the target. Otherwise, you're usually able to trail a little bit more out of it. Now, the stop loss, where do we put our stop? Well, the stop loss is going to go 3 ticks below the low of your entry bar. And because we know the entry bar was this green candle right here, our stop will go 3 ticks right underneath it. So the stop started at 103.34, so 3 ticks underneath that, 103.31 is our stop. So our entry at 103.43 to our stop loss, we're risking 12 ticks, and that midline was right around 55 or so, which gives us pretty close to the same thing, 12 ticks. So it's pretty much usually a 1-to-1 when you initially get into the trade. So that's where you're going to be placing your stop loss and your targets on these types of trades. So that's going to be taking a look at day trading with linear regression channels. If you have any questions about it, feel free to send an email to School of Trade, and don't forget to check out our trial at schooloftrade.com. Have a good one.